the core part of the city. And an exception was made for so-called new energy vehicles or electric vehicles, essentially. And those exceptions made it very, very attractive to get an EV because it let you bypass a very costly and difficult process of obtaining a license plate to enter the city. And that boosted EV adoption in exactly the core markets where you would think that they would start to take off. That is the more affluent urban centers in China. So there's a whole bunch of other, charging infrastructure. A lot of cities experimented with subsidies for building chargers. In China, this is different than a lot of other parts of the world, but often people in major cities own a parking spot, right? So you pay rent on an apartment. You might also pay rent or own a parking spot. And if that's the case, then you might get a subsidy or some kind of tax break to install a EV charger at your parking spot. And then later on, that could be used in case you move, someone else could use it when they take over. Um, there's a degree of adaptability that I would highlight here, right? So it's sort of this paradox where you have a strong signal from the top saying like, yes, we are committed to electric vehicles, or yes, we are committed to high-speed rail in the long run. But the actual policy tools and strategies might shift over time. And, speaking of EVs, China has been trying to build a world-class auto industry for decades, and try different strategies. For a long time, it had relied on these state automakers, like SAIC, and that didn't seem to go anywhere. Then they tried to push joint ventures with Volkswagen, GM, Toyota, and those were successful to the extent that China's domestic auto production boomed, but they were widely seen as a failure in many ways because China didn't produce its own Ford or Toyota as a result on the international stage. Um, that changed with this shift towards an EV strategy. So for a long time, with the traditional auto industry, Chinese automakers were pretty content with their slice of the domestic market, and they had trouble getting sort of the core combustion engine technology. But with EVs, that offered a way for Chinese automakers to leapfrog in some ways the sort of bottlenecks in technology and production know-how that had constrained them previously. And you have a new crop of Chinese EV makers like BYD, even Geely, um, sort of taking over and leading the charge. So it just shows you that, you know, while the overall strategy remained there, that is to become like a global force in the auto industry, the strategies have varied widely. China has been pushing hydrogen fuel cells for a long time and trying to build up that technology as well as a possible channel. Um, Another point I would highlight here is the role of industry spillovers, and um, and so unlike industrial policy, probably as it's thought of in other countries like here in the U.S., where you think of a single industry and it's tax incentives to get firms to invest and grow in that industry. China does sort of multiple industries at the same time. So Made in China 2025, you had a range of industries that were targeted by that plan. And the idea here is also to have these sort of spillover effects that these industries feed into the broader economy and they also feed into each other. So an example I like to give is if you have a strong shipbuilding industry domestically, then that actually gives you a very strong edge in offshore wind because you can build these special, ships called wind turbine installation vessels that are needed in order to build offshore wind farms. And the shipbuilding industry in turn is aided by access to the world's largest steel industry, for example, as well as a large industrial robotics industry. So these things sort of all build onto each other, and there's even crossover where some of the same industrial automation firms that help with the shipbuilding industry also help with the EV industry and consumer electronics. So they all kind of blend together. Again, another example is with shipbuilding and EVs, you can build at scale these large roll-on, roll-off ships for transporting cars. Okay. Um, yeah. I'll mention briefly, right, the role of industry clusters, right? You do have this phenomenon that was organic originally, but now is sort of a very deliberate strategy to create these regional centers for industries to cluster together. And now we're seeing it with more high-tech industries and the creation of industrial parks deliberately designed to target things like AI and robotics, for example. I'll come back to that later on. There are a lot of problems along the way, and I'll mention a few, right? You get these chronic bubbles, right? They come up again and again. For example, this is Evergrande, the real estate company you guys might remember that really shook the entire Chinese real estate sector. But Evergrande, in its heyday, had its own electric vehicles business. It's sort of mind-boggling now to look back on that. And it was valued at something like $80 billion at its peak. So it just kind of shows you that when you do have these government programs targeting certain sectors, there can be a lot of waste along the way. There can be a lot of excessive speculation. Every firm, even ones that are not specialize and have the real expertise, they jump in, local governments jump in, even though they don't know what they're doing, and they all start their own local champions. And you just have this sort of massive expansion of capacity, and eventually there's some kind of moment of reckoning. Another example here I like to point out is the semiconductor industry, where China has really been pushing hard because of the US-led export controls on access to advanced chips and advanced chip making equipment. So China has gone through several waves of major semiconductor investment funds, also called the Big Fund, where they just are pouring money into every step of the supply chain. And along the way, you have companies like this one that sprung up in Wuhan that claimed to have bought a high-end lithography machine from ASML and had no idea what they were doing, and actually were using that machine as collateral to get more loans, and eventually they collapsed. And that was I believe that was a multi-billion-dollar sort of loss for Wuhan. Um, and yeah, and as I mentioned earlier, you have this sort of race to the bottom in terms of everyone trying to ramp up capacity, not caring too much about near-term profitability. But then if it's sort of this game theory, low level equilibrium where everyone is rushing to expand, nobody's making money, and then at some point, either you are relying heavily on the government for subsidies, or you're really starting to go into debt at the local level. So, on the sustainability aspect, this is something where Beijing itself is like constantly worried about this problem and trying to adjust and deal with these issues. On the international front, you have a huge backlash, right, around the world to an explosion of Chinese exports, especially now as China moves into higher value sectors that challenge a lot of core industries in the West, right? And you have now, I think, it would be unsurprising to many to make that connection between the economic effects and the political backlash. And so in many ways, the rise of Trump and Trump 2 and the whole trade war is, I think, a direct consequence of some of these effects that we've been seeing over time. What's going on looking ahead into the future? Okay, so part of the response to some of these tariffs, again, not just from the US, but the EU, Brazil, Mexico, India is sort of its own special case, and I'll come back to that in a second. But in response to needing to get access to markets, a lot of Chinese firms are expanding their manufacturing around the world, building plants in those markets, trying to get access, especially to larger markets. And so I argue, China's trying to reshape global supply chains, centered ultimately around China at the core. And there's a lot of historical parallels here with what Japan and South Korea did, turning Asia into their manufacturing backyard. But the idea is China retains a lot of the core technology, a lot of the sort of high-end part of the value chain, but starts to move out some of the lower-end production to other parts of the world, Southeast Asia, Latin America, for example, responding in many ways to incentives and tariffs. And um, and this Chinese manufacturing investment can be quite a useful carrot for Beijing, perhaps even more attractive than the Belt and Road Initiative, which I think, from a public view standpoint, had sort of a mixed effect, right? So, Chinese investment could potentially bring jobs could potentially bring revenue, economic value, even possibly technology. So these, Chinese factories are an attractive thing to have and offer Beijing actually some kind of leverage now going forward. And so I argue that Beijing is not just letting this sort of play out naturally, where Chinese firms just seek to make the most money and go wherever they want to go. But I argue that Beijing is trying to steer investment to countries that it sees as more China friendly and away from countries that it sees as less China friendly. And I call this sort of an industrial diplomacy, leveraging this sort of new carrot, this new um, thing that a lot of countries do want. And so I'll give you some examples of like different kinds of countries that are being sort of targeted for outbound investment from China. You have large markets like the EU, Brazil, Russia, Indonesia, and the US. And you also have connector countries like Mexico or Vietnam that have access to the larger markets. Morocco, for example, has been a huge recipient of Chinese investment, especially in batteries and auto investment. And that's because Morocco has trade deals with the US and the EU. But some of these countries are deemed by Beijing to be friendlier to China, or at least more open to Chinese investment and Chinese business, and some are deemed to be less friendly. This is a very crude way of putting it, but I think you kind of get the point. Even within, say, the European Union, there's a distinction between countries that, for example, voted against tariffs on Chinese EVs. So you have some of those countries um, receiving more investment. For example, I think a new plant was set up in Spain or announced in Spain um, after Spain, I think, abstained from voting on the tariffs, whereas countries that voted for the tariffs have seen some consequences. Like Poland lost a planned investment in a Leapmotor Stellantis plant that was going to happen there after Poland voted in favor of putting tariffs on Chinese EVs. So, I mean, there's a lot more here, right? I don't want to sort of reduce it down to just this single phenomenon, but I would argue, and then there's reporting on this, that Beijing is deliberately trying to steer Chinese companies towards certain countries and away from others. Hungary is very close geopolitically to China, so Hungary has been getting a ton of CATL, BYD, Chinese investment overall. I think it's the largest recipient of Chinese investment in Europe. Brazil is also very close geopolitically to China with Lula, and so Brazil is actually the largest recipient of Chinese investment in Latin America, also because it's the largest country. India is a special case. So I argue that, in particular, India is one of these countries that I think Beijing is trying to steer investment away from. And obviously, there's a whole, you guys know better. I'm speaking to an expert group here. You guys all are very familiar with the story here. But, one example is the rate at which iPhone production has shifted to India, I think has been surprising to many people, to me for sure, but also I think has been shocking and probably worrying to those in Beijing who expected that China would have a lock on something like iPhone production for the foreseeable future, right? So something now like 20% of iPhone production is done out of India. Um, and people debate about whether that's assembly versus manufacturing, and we can get into that. But suffice it to say, I think this rate of change has surprised a lot of people, and so we've been getting reports now and confirmed by a number of different sources. And I've spoken to some people too who say that in India you are facing delays on imports of Chinese equipment needed to produce components for iPhones and consumer electronics. There are sort of soft directives to limit Chinese personnel to India, and also efforts by the Ministry of Commerce in China to tell companies like Chinese EV makers to avoid investing in India, or at least to be cautious about doing so. And and so, of course, obviously, this comes amidst a whole backdrop of tensions, especially following Golan, where there was like a very strong investment chill and a strong chill across between the two countries. There's a lot happening now, and I'll be curious to hear your guys' thoughts as well. But also, solar equipment is another example where there are reports of delays from, a lot of the actual solar manufacturing equipment itself is now made in China. Even tunnel boring machines, with not a real impact in that one for on India's capabilities, but just another example where um, you know across multiple sectors you have reports of China trying to hold back equipment and inputs and personnel. Okay, now just to sort of wrap up, China is trying to use a lot of its existing industrial playbook to um, win and dominate the industries of the future, is sort of the way I put it. Everything from AI to aerospace with its new commercial jets to drones, robotics, autonomous vehicles, right? There's a very, very strong push in a policy sense, not just from the private firms themselves, but from Beijing itself, trying to position China to be a leader in a lot of these industries. And one example is AI industrial policy. AI is not probably an industry you would think of that where you could apply industrial policy, right? It's not just one where you can build a bunch of factories and pour a bunch of capital investment. But in a sense, Beijing thinks it can. So one example is these state-funded data centers that are popping up all over the country. And and another example are these AI labs that are state-backed, often founded at the local level. So Shanghai has one, Shenzhen has one, Hangzhou, or at the provincial level. Beijing has a few, and these AI labs are actually doing cutting edge research, publishing and presenting at top international conferences. So that seems to be working. But on the data center effort, there are a lot of mixed results where a lot of these data centers sit unused. They are poorly built. They require a lot of technical expertise to do it well and to do it effectively, and it could be ultimately a waste of limited chips and limited access to compute. So there are a lot of problems along the way. This is sort of going back to the overcapacity problem where every local government is jumping in, trying to build without really thinking about, does this make sense? There's a lot of fraud too along the way as well, trying to take advantage of these schemes. And then I'll just point out this AI tech stack, right? And this slide maybe don't share widely yet because it's not published, but this chart shows, across the entire AI tech stack, from chips to servers, data centers to firmware, software platforms and applications. At every level, you have Chinese firms operating, and you also have government policies trying to promote investment and adoption across the space, especially if you look at towards the top in areas like robotics, high-tech manufacturing, sort of these hard tech sectors that China has really been focused on for a long, long time. While the US is very interested in, software, ChatGPT, things like that, I think the focus in China still remains, even with the embrace of LLMs and, Gen AI, the focus is still on physical applications of AI in particular and technology. And the last slide that I'll leave you guys with is, taken together, right, you have a sort of clustering of different overlapping industries being emerging in China that feed onto each other, that sort of create this interlocking system where if China gets stronger in some of these areas, it actually strengthens others, right? So you can take an example of being strong in batteries and sensors and building electric cars gives you an edge in autonomous vehicles and autonomous systems, right? It's a lot of the same components that go into those sectors. Same thing with being strong in smartphone manufacturing, consumer electronics, and building your own semiconductor supply chain. That all feeds into other areas like a robotics industry. And so you see all these overlaps, even specific companies like, Xiaomi began with smartphones and now moved into EVs. Or BYD began actually with batteries for smartphones, eventually went into, or batteries for laptops, eventually moved into EVs, and is now expanding into everything from semiconductors to, autonomous driving. You have robotics companies, sort of reaching out and expanding, and then you have, of course, companies like Huawei that are unique, that are trying to do sort of everything all at once. So those are just some examples of how some of these industries don't just operate in isolation, but are sort of feeding onto each other. And the question then is, will this sort of create a new cluster, not just in terms of the technology, but the manufacturing capability in China for these, high-tech industries? And what might that mean for other countries competing in these same spaces? So I think I'll pause there, and I will be very curious to hear your questions and your feedback, and especially obviously you guys know better than I do about China India relations and things like that, the latest developments. So thank you very much.
Thank you very much, Dr. Chan. That was really fascinating, and you managed to cram in quite a lot into just exactly half an hour. So thank you very much for that. Now, I find that there is one question in the chat box. Am I right, Mahek?
Yeah, I'll just read that out, and others can start posting questions if they have any.
So I think,
So,
yes, you can start, the others, audience can start posting their questions. Alternatively, they can use the raise hand options,
yes,
uh, uh, so that we can call upon you. Meanwhile, why don't you start reading the first question, Mike?
sure. So, Mrs. Kalyani has a question. How do you respond to the vampire state critique of China's tech policy that its rise is fundamentally rooted in state-backed industrial espionage, forced tech transfers, and intellectual property theft? To what extent is this narrative accurate, and what does it miss about how China actually builds technological capacity?
Yeah, great question. Great question. Yeah, and that's yeah, I could give like a whole presentation on just this topic alone. Yeah, and it was something that I had brought up in that China Commission testimony earlier. But um so both things are true at the same time. It is absolutely the case that China uses industrial espionage and IP theft on a vast scale in an organized fashion, supported with the government to obtain technology, especially from countries like the U.S., Germany, Japan, elsewhere. They also do a lot of poaching of talent. You look at the roster of managers or top executives at SMIC, China's semiconductor, one of its top semiconductor firms, and how many of them came from TSMC in Taiwan, or a lot of Samsung and SK Hynix engineers being poached and brought over to China. There, the problems with industrial espionage go back very far. You guys might not remember, but Huawei was charged with stealing source code from Cisco and Qualcomm, and literally even had the same software bugs, right? According to the court filings, the same software bugs as the source code for Cisco. So it's sort of like it's been a long problem, and countries like the U.S. have long complained about it. That being said, I think it is just one component of this sort of like multi-pronged toolkit that China has used. And I don't think it's the central one ultimately. There's a limit to how much you can just take from other countries. And one thing that has been very interesting about the Chinese case is, for lack of a better term, this absorption capacity, this ability to not just get technology somehow, but to be able to kind of like localize it, turn it into your own, and incorporate it into, and build on top of that, right? So the high-speed rails example is one of those where there's a lot of debate about how much of that is core IP is now like truly Chinese. But at the end of the day, you do have, these trains are manufactured in China. A lot of the components are now manufactured in China. And there's a broader sort of science and technology push behind that. Another area I would point to is just, this is not like a exciting topic for a lot of people, but the universities matter tremendously in China, and these state research centers matter tremendously, and they are sort of quietly in the background doing their work and building up expertise in, say, the next generation of solar cell technology. And it doesn't usually make the headlines, except maybe South China Morning Post sometimes. But but that really gives you that scientific foundation for being able to take technology, however you got it from elsewhere, and turn it into something you can build on.
Thank you, Kyle. The next question is Vedas. Mahek, you can read that out.
So, Ms. Veda asks, could you unpack the concept of industrial diplomacy? Beyond access to large markets, what other factors might influence Beijing's choice of investment destinations? For example, some studies suggest a correlation between favorable UN voting patterns and increased Chinese investment. How significant are such political considerations? Also, how do you see Africa's growing role in reconfiguring global supply chains, and what advice would you offer to African governments as they set their industrial priorities in this evolving landscape?
Yeah. So, hi, Veda. These are great questions. Yeah, and thanks for joining. Thanks for asking. Yeah. So, okay. So for the first one, yeah. So industrial policy, I think, is oriented especially towards market access. This combination of both market access to commercial interests, but then also the sort of geopolitical favorability. And I think actually the UN voting patterns is a really helpful proxy for seeing that. So I've seen some work looking at that. And I think it's a very useful way actually to start to think about which countries are seen, at least from Beijing's perspective, as being closer to China. Um, and I think it's also something that changes, right? Because especially in democracies, right, administrations can change. The ruling party can change. You have you can have wild swings, like with from in Brazil, from Bolsonaro to Lula. I mean, really sharp change in attitude. Or you can even have sharp swings within an administration. So you have Milei, like changing his views, originally saying he was very anti-Chinese investment, and then somehow I think when he got Chinese investment, he was very pro-Chinese investment. So and there's a whole sort of there's a feedback loop here where there's sort of like you can use China's maybe using some of these the possibility of investment as a way to try to influence the at least political attitudes towards China in some of these countries. So it can sort of work both ways. And then on Africa's role, so yeah, so this is very interesting because I think the standard story up until now has been a lot of resource extraction, which is still very much the case. Bauxite in Guinea or cobalt in DRC, and then you had the Belt and Road sort of layer on top of that, trying to build that infrastructure with again mixed success, right? You have some backlash in, say, Kenya. You have some changes in the political situation in Ethiopia that complicated some of China's plans there. But yeah, one thing that I would, if I was so so bold as to offer advice to African governments, one thing that I would try to emphasize is not just pushing on moving up the resource value chain and moving up. Indonesia has done a good job, I think, in some ways, where they sort of stopped nickel exports and told Chinese firms in particular, you need to refine in country, and then we can capture more value. But ultimately, I don't think that's really the path to long-term development, and also the best way to harness sort of China's own investment and willingness to want to cooperate in some of these areas. I still think at the end of the day, it comes back to some of the basics of trying to bring in, start at the low-level assembly work and try to bring some of those that sort of lower-end manufacturing first over. Again, it depends on a lot of factors, including like the infrastructure and the ability to move goods and to export them out of the country. But I would focus on that area and start to move up those value chains rather than necessarily. It seems tempting to begin where you're already strong on resources, but I actually think that is harder to do, and I don't think can lead to as much sort of sustainable growth in the long term. Yeah.
Thank you, Kyle. There's one more question, Mahek. You can
Yeah,
read that one out.
yeah. So Mr. Soumya asks, in what ways does China's green industrial policy intersect with its broader geopolitical ambitions, particularly in relation to the global south? Could we explore whether its investments in renewable infrastructure and green technology serve not just as environmental goals but also function as instruments of soft power or strategic influence?
Yeah, that's a great question. And yeah, I think yes, I agree that these clean energy investments, renewable energy investments, um, are definitely part of a soft power push from Beijing. In addition to, again, the sort of like sheer commercial interests of Chinese firms themselves. And I would argue that this is happening in two ways. One is China's effort to at least portray itself as a leader on climate change, especially now with the U.S. turning away from climate change. So like it's still striking to this day to me when I think about how Xi Jinping had those dual carbon goals, and in some ways I had been a little bit skeptical of China's commitment to combating climate change per se, because I saw it more as an energy security issue as well as an air pollution and environmental concern. Um, but I think those dual carbon goals did something on the world stage. They were trying to position China as a global leader on a major issue of concern, not just for, again, Europeans or Americans or whatever, but really for a lot of people across the global South as well. So I think it shouldn't be overstated the role of that kind of signaling at the top, and the role that now China is trying to play, positioning himself at least rhetorically as a leader on climate change. And then specifically, a lot of these green investments now offer, I think, something perhaps even more attractive, as I mentioned earlier, than Belt and Road. So they dovetail well with different countries' own efforts to combat climate change. Brazil is a great example, and their simultaneous push into manufacturing, right? So Thailand is another example where Thailand wants to reduce its own emissions, is trying to make the transition, especially to away from oil, and also seeks to position itself to be a key player in the global auto industry in the way that it currently is as a platform for, say, a lot of Japanese automakers in the region, in the traditional auto industry. So this combination of both offering sort of a way to address domestic climate concerns, and as a way to do this, to support, local industrial policy, wherever it may happen, I think is part of like this broader soft power effect that Beijing is looking for. I mean, again, the elephant in the room, the sort of really big question mark is India. And I think again and again, this relationship is changing. It can go in a number of different directions, but I do see it very interesting, at least as an outside observer, to see how strongly some of the goals of India's national goals and China's stated goals do align, and yet because of the obvious sort of geopolitical tensions between the two countries, it creates barriers for some of this um, cooperation to happen. So it's sort of interesting. It's like two magnets that are very strongly attracted to each other and would be complementary in many, many different ways: technology, manufacturing, infrastructure, climate, environment. And yet there are very strong forces pulling pulling in opposite directions at the same time. It doesn't help, obviously, with the situation with India and Pakistan as well, and China's support for Pakistan. So all these things just add layers and layers of complication on what would otherwise have been almost sort of a natural partnership.
Thank you again, Kyle. While we're waiting for some more questions in the chat box or the raise hand option, I'm going to fill the gap by asking you another question. Now, you told us about the German and French and Canadian companies selling their high-speed trains to China, and that after a certain time, a deal was struck whereby they were allowed to access the Chinese market on condition that they turned over their technology, right? Now, whether they were happy or not about it, the fact is they did sign a deal, right?
Hmm.
And that deal would have worked for both of them, both China and the foreign companies.
Hmm.
The foreign companies might have said, okay, in 5 or 6 years, if China gets all the technology, by then we'll have made all the money we want from
Hmm.
this product, right? Now, I want to flip this over the other way to look at China and India or China and other countries. You
Hmm.
mentioned in your talk that in certain cases, particularly with India, China is limiting the flow of machines and technology and uh, expertise and so on.
Hmm.
But India has a very large market, and
Hmm.
presumably China wants to monetize its technology, which it has built at great expense and investment. It needs some money in return, right? So if there is a big market and the two can strike a deal similar to what happened in China's own case, then what's the problem
Hmm.
over here? So this is one question I want to ask you. And another one, while I've got you as a captive, is um, on the green technology, which we just discussed. China is the biggest producer of all these green conversion equipment, various types. The whole world is having this is climate problem. You have one big supplier and the whole world, but everyone's at loggerheads with each other. So now this is the collective action problem, but the end result is quite serious because everyone might just lose everything, right?
Hmm.
So
Hmm.
any thoughts on this? This is a philosophical problem more than anything else, but I'd love to hear your views. Okay, I'll stop there.
Yeah, these are brilliant. These are brilliant points, brilliant questions. Yeah, yeah. I'm so glad you brought these up. Okay, so on the first one, yes, it is true that there was a deal that was struck. You're right, and it was a deal. It was meant to be, as the Chinese say, a win-win, right? It was supposed to be one where, especially you think about it from the viewpoint of these, say, European train makers, Japanese, where they are facing mature markets at home. Their hope for growth just from their own domestic markets is in the low single digits for the foreseeable future. And then here suddenly you have a once in a century opportunity for a market boom. And if you're not part of that, you're really missing out. And the deal was that, and they negotiated a lot of the details here. They would share some technology, maybe not the most important technology, but some of it, and also agree to partner and jointly produce locally in China. And so this was the deal. And you look back, and a lot of these companies, not just the train makers, but auto. You look at a lot of the manufacturing equipment makers, robotics companies, industrial robotics companies. They made a ton of money in the Chinese market. Yeah, I can't remember the stat now, but I had calculated like Apple's total profits out of China. Profits was like in the tens of billions of dollars over time. So it was pretty lucrative for these companies, and I do think that they had this belief that they could make money at least in the short to medium term in China, and that over the long term they would still retain a technological edge, that China would not catch up with them and one day challenge them, especially in their own markets. So that part has been a bit surprising, and so I think there is some regret on the side of, say, Siemens and Alstom and some of these European companies, where they thought, or even now GM and Ford and the auto industry in the US, where they thought, okay, we will make some money in the near term, but the Chinese will never catch up to us and really challenge us. And that has been a surprising turnaround. So I think now they're scrambling, and I think it doesn't help that, in China, especially for these state-owned enterprises, it's very easy for the government to roll up, or not easy, but more straightforward for the government to roll up a bunch of these companies and build and form, say, the largest shipbuilder in the entire world or the largest train maker in the entire world. Versus in the EU, there was like all these anti-monopoly issues with, say, Siemens and Alstom joining up their train businesses. So the scale matters tremendously, and now I think they're facing a big challenge from Chinese competitors as a result. So there's like this judgment call, and then on China and India, it's very interesting because yes, I think I remember actually on trains, for example, I remember attending a big train conference in Delhi. Um, God, who was the railway minister at the time? It was before Goyle. It was anyways, but and one of the attendees, one of the speakers at this conference was the lead India representative for China's CRC. And they said we would like to be part of the Indian market. It will be a huge market for trains in the future, especially India's moving into high speed rail. So that would and China has, I always say this, but every year, but maybe I'm wrong, but China has pretty much saturated its own domestic market now for high-speed rail. So what is the logical next giant market opportunity? It's India right next door. Um, and I think same thing for electric vehicles, for example. So BYD, right, as you guys may recall, wanted to set up a JV in India. Seeing again, this is like the perfect market opportunity, and and so there were questions about national security issues, I think, that came up from the Indian side. Later on, from the Chinese side, there were worries about protection of Chinese investments and Chinese, assets in the country. So those complicated issues, to say the least. But the fact still remains, and I think your point is a really good one, that from a sheer commercial perspective, um, the partnership seems so perfect. So it is interesting to see then how strong these sort of geopolitical forces come in to intervene. And then just briefly on your other question, which is also a fantastic one. So we're talking about green investment across remind me, across the global south.
Yes, that's right. I mean, green investment to combat climate change, which is
Yeah.
a world good, but the
Yes.
world is not acting collectively on on
Yeah.
this score.
Yeah.
Yeah.
Yeah. Yeah, I think there's a reckoning that's happening in every country individually where we have to decide, we meaning the rest of the world, each country needs to decide how much of the focus should be on quickly just building up clean energy capacity and making that and speeding up the transition. In which case, that might entail leaning more heavily on Chinese green goods and Chinese, clean tech manufactured goods. And how much do we want it to happen in our own countries in terms of the manufacturing and the jobs and the value add? So I think one possible way to think about it is for some industries like solar. I think India is actually a really interesting example. You can achieve very, very rapid progress on the clean energy transition um, by relying on Chinese solar, while at the same time trying to build up your own domestic capacity. And there's obviously going to be some trade-offs and some balancing between the two. But then also keep in mind that even if you're importing, say, solar cells from China, you can still capture a lot of the downstream value, especially through deployment and operating, solar plants and connecting to the grid. And there's a lot of value captured there. In the U.S., it's like even it's like several times higher than the actual value of the goods themselves, of the, say, solar panels themselves. So that's something to just think about. Yeah, it would depend country by country. There are different priorities, and also industry by industry. Solar is different than wind and different than EVs. I understand EVs, auto industry is very, very sensitive for many different countries that have it, and that transition is going to be a very tricky one to navigate.
Thank you, Kyle. Anupam, you had a comment. Was there a question you needed to ask? You can put your hand up if you need to do that. Um, and after that, we'll have Partha. He's got his hand up. Anupam? No, he's hasn't responded, but he has a comment. Would you like to read that out, Mahek?
Yeah, so he says, excellent presentation as always. Particularly appreciate his tailoring his presentation to the specific audience and Indian concerns.
Thank you.
Thank
I
you.
appreciate that.
Right. Partha, over to you.
Hi. Thanks, Kyle. This has been wonderful. So glad you could make the time. Uh, if I can just take you away from the big picture to the sort of more nitty-gritty stuff since with so much work at the detail
You're
level.
not totally clear, Partha. It's
Am
breaking
I
up.
not totally clear? Am I better now?
Can you hear
Is this
him
better?
clearly? Yeah. Okay.
Mm, Uh, can you hear me now?
Sorry, sir, I think your voice is breaking up. If it's possible, can you type out the question?
Partha, if you're typing it, we'll go back to Anupam, who's
Oh,
back on the line. Anupam, you have a
Yeah.
question?
I don't have a question. I have actually many questions, but I'll have to take them online, offline. I have heard Kyle before and read some of his. I subscribe to his Substack, but
Oh, thanks.
so I won't take up time today. Thank you very much.
Thank you.
Thank you.
Yes, please
Thank
reach
you.
out to me. I'd love to chat.
uh,
Right.
uh, am I
Partha?
clear now, Ravi? Can you hear me now?
Yeah, that's better. Yeah.
Okay. Um, no, so Kyle, two kinds of things. One sort of very long term, which is why the standard theory says it's very hard to pick winners. And what you say is that picking specific winners is the Chinese have not been that good at, in the sense that there's a
Mhm,
lot of losses.
mhm,
But sectorally, they seem to have picked the right sector. So that EV, or whether you're looking at um, solar, you're looking at certain kinds of semiconductors, so the shipbuilding. So, in a sense, they have managed to capture the right sectors in some sense. And
mhm,
especially in something like shipbuilding, to me, it seems like an almost 20-year kind of uh,
mhm,
term in some sense, even well before tea and the make in China kind of story.
mhm,
So, do you, the first thing is, do you have, could you help us understand this part of the story of picking particular industries and then devoting those resources to make it happen? And
mhm,
especially in today's context, when you have the Trump tariffs and people just talking about uncertainty in the US,
mhm,
uh,
mhm,
here are some Chinese state-owned enterprises, but also private enterprises who are
mhm,
sort of betting their resources on, as you said, directions and intent of the sort of central leadership, then which is then
mhm,
filtered down to the local government. So that's one, the picking sectors kind of story. And the
mhm,
second is this whole issue of, you just laid out the high speed rail kind of story. And the high
mhm,
speed rail involves, in some sense, spillovers and transfers
mhm, mhm,
across an
mhm.
ecosystem, right? Now,
Right, right.
you would expect that if these were individual private profit maximizing firms, everybody would guard their little tech jealously, and that
Mhm, mhm,
spillover stuff would be much less than otherwise. And that's one of the issues with IP, the global benefits versus individual benefits kind of story. And so, what is it in the Chinese system that sort of allows for this spillover stuff to happen?
mhm,
Is it essentially a lot of moral suasion, governments leaning on particular firms? In the case of
mhm,
the high-speed rail, of course, it is mostly state-owned firms, so I think one can
mhm,
lean on them. But in the case of EVs, Geely and BYD are in some sense private uh, listed companies. So, could you help us understand a little bit about this flow of tech from one firm to another? How does that work to create a system? Why does it seem so much more easy for these spillovers to happen within the Chinese ecosystem than, let's say, in a
mhm.
standard market capitalist system like the US?
Mhm, mhm. Yeah, wow, these are amazing questions. I mean, a book on each would be not enough. But yes, so on the picking sectors, yes, I think that's the right way to see it. I think the way I characterize it is China's pursuing more of a portfolio approach when it comes to these different industries. So those of you who do your own, personal investing, you can think of trying to pick companies, and it's very hard. You need a lot of information, and it's hard to predict the future for which one might win. But if you are betting on an industry being a lead, playing a key role one day in your economy or a future emerging industry, then you can kind of spread your bets. So this is what happens a lot, where Beijing and then across the different local governments, they're spreading their bets across not just different companies, not just different regions within China, but even different types of technology and different business models and strategies. So I think what happens is, um, in the U.S. side, for example, we tend to be very focused on the failures, like a Solyndra, where it's like, oh, that was a waste of government money, taxpayer money, and that shows the perils of doing something like industrial policy and having the government intervene in the economy. And there are certainly a lot of perils to the government intervening too heavily in the economy. Um, but I think from the Chinese side, they see that as a cost of doing business, as the waste that I had mentioned, even the outright fraud in many cases, the failures of these different companies, the bubbles emerging and then popping, and the individual companies themselves rising and falling as just part of this broader, longer term push into the different sectors. And sometimes, I didn't mention like the solar industry is one example where there was actually a sort of mass extinction event already that happened in the late 2000s in the Chinese solar industry, and a whole new generation of Chinese solar companies. So from the outside, it looks like China has just been increasingly dominant in solar manufacturing. But in fact, the actual individual Chinese firms that have played a role and been dominant within that space have changed over time. And you have names like Suntech that receded, and others like Longyi that have or Tongwei that have suddenly become the new leaders. So there's that shift happening underneath the surface, even with that sort of upward trajectory. And then yeah, like which industries too. And I think there's a sense. I think there's even like this goes back to China's like communist roots. There's a sense that like there are certain pillar industries that either pull or feed into the rest of the economy in a way that um, is just different from, say, regular consumer goods or things like that. And shipbuilding is one. And then I should mention, and this is sort of, the other elephant in the room, but there's a huge role for the dual use technologies, right? So I think it is not a coincidence that many of these same industries that have been priorities for Beijing, for Made in China 2025, and a whole host of industrial policies have direct implications for China's military capacity. Shipbuilding probably being Exhibit A, but also even electric vehicles and autonomous vehicles. I mean, remember the original sort of self-driving cars came from a DARPA project, or that was probably the sort of big bang moment back in the U.S. They have very, very strong implications for autonomous weapon systems. So it's something that maybe some people don't want to talk about as much, but I think it's a key driver of also why China is betting long term on some of these sectors. And then yes, part of, to build on what you were saying in your question in the chat too. Yes, I think there's more of this VC mentality, and I think actually Singapore and Temasek is the model that they have in mind, where they're trying to, again, make a broad bet across a whole bunch of different firms, or boost an entire industry, and hope that eventually a BYD or a CATL or a Huawei emerges from that process, even despite all the failures along the way. Then on your question about the spillovers and how this technology and know-how seems to spread and jump from Chinese company to Chinese company, I think that's such a fascinating question, and I would point to a couple things. One is the fact that personnel circulates very extensively across all of these companies. You take the EV sector. In fact, you have a whole wave of former Tesla engineers, Tesla Shanghai engineers, who went off and joined, Li Auto or Geely or some of these Chinese auto companies. So you have that sort of like, you know, embedded knowledge in your brain walking out the door with with your engineers. And that flow is between Chinese firms and then also between foreign firms and Chinese firms. And I think that permeability, and I think that's part of the key to why China's AI industry has been doing so well. I think part of it is because you do have a lot of connections to America's AI sector, and a lot of sort of cross-pollination. You know, they present at the same conferences and actually collaborate in many areas. Microsoft Research is now under the microscope here in the US, but Microsoft Research Asia is, I think, actually one of the key players, for example, in helping to foster that. At the same time, there are deliberate government efforts to try to build that industry collaboration. And one example I would give is the battery sector, where I think Chinese battery firms like CATL and Gotion and others, CALB, are paranoid that their technology right now, they're dominant in LFP, lithium iron phosphate. They're paranoid that there's going to be a new generation of battery technology, a new battery chemistry that might become the new paradigm. And if China doesn't catch that wave, then leadership would go easily to Japan or maybe even the US. So there's always that risk. And I believe it was either Ministry of Commerce or MIT had like convened a bunch of the Chinese battery makers to work together jointly to focus on solid state batteries and sodium ion batteries, sort of looking ahead to the next generation, always paranoid that they will miss the boat, you know, again, as it were. And so there are some efforts at the government level to try to bring in, and of course there are barriers too. I mean, you look at the tech companies themselves, and they're very protective about some of their IP as well, and sharing that. So it can definitely vary. Yeah.
Thank you, Kyle. I know that all of us, including me, would like this session to continue for some time, but I'm very conscious that your kids have to get to school. And we in India are very particular about what schoolmasters and schoolmistresses think of our kids. So I don't think we should hold you up. But on behalf of our audience, I would like to thank you deeply. It's been an absolutely fascinating presentation and handling of the diverse questions and queries that people have had. It's been a very rich discussion. Thank you. And I'm sure we will keep in touch with you and have the opportunity to have you again later on one of our programs. Thank you very much,
Thank
Dr.
you.
Chan.
It was such a pleasure. Any of you, please, you know, reach out to me. Let's stay in touch. And also, we can circulate the presentation if it's useful to anyone as a reference. Feel free.
Please.
But yes, it was really a pleasure. Thank you very much, everyone.
Thank you. Thank you.
Take care.
Thank you, Chair. I seek your permission to formally bring an end to today's session.
Please go ahead.
So, with this, we come to the end of today's seminar. We thank Dr. Chan and Mr. Bhuthalingam for gracing today's seminar with their presence and for giving us their precious time. We also offer gratitude to the audience for joining us today. The video of today's discussion shall be available on the ICS YouTube channel. We would like to invite you to the upcoming Wednesday seminar scheduled for 28th of May 2025. Further information regarding the event can be found on the ICS website. You may also subscribe to our newsletter for regular updates. Thank you for joining us today.
Thank you.
Bye-bye.